Hey friends, Lucian here with the Bullish Bears team, making the watch list video for tomorrow, which is Thursday, September 7th here now. I did the watch list beforehand. I'm going to try and start saving some time. Maybe I'm going to start trying doing some of the videos ahead of time, building the watch list, then I'll go over the actual watch list and what I'm looking for. That way we can maybe kind of cut down on the time of these videos so they're not so long. Again, so the scan that I did was for 30 cents. I moved it up to $15, minimum 500,000 volume on the day with a 5% gain. And I just kind of sorted through. I'm trying to weed out some of them. I'm looking for the ones that have either the best breakouts or breakdowns on the daily chart. So stocks that have a good chance to break out above and go long on the day, or for the following day, or ones that are maybe overextended and looking for a pullback. For those that are kind of worried or scared or not unsure of how to short, shorting's actually very simple and it's a lot less complicated than people think. I think it's just the idea of shorting that really scares people. But to be honest, like myself personally, I actually feel almost more comfortable shorting than I do longing. And it's just getting familiar with what you have to do when you buy and sell the stock. It's just basically the reverse of what you would do buying the stock. You would basically sell it instead. So it's actually not as scary as people think. You know, holding overnight or a couple days, stuff like that could make it kind of scary. But if you're day trading, it's really not hard whatsoever. You just got to look for the patterns and just do the opposite of what you would do regular day trading. So if you were going to buy at the ask and then sell at the bid, or buy at the ask and sell at the ask. So let's say, you know, the stock's going up. Just for instance, we'll just use this one, VSTM right now. If you bought it at the ask, you're getting in at 506, right? If you sold it, obviously be at 501, so that would be a loss. But as the stock's moving up, let's say you bought it at the ask, which means you get filled right away. Let's say the market was open right now. You bought at the ask at 506, you get filled. Now let's say the price goes up. Let's say it went to 516. Let's say the ask was 517 and the bid was 516. If you click sell the bid, then you would have sold it at 516, right? So you made a 10-cent profit. You know, if you sold at the ask, if the stock was going up and you got filled, then you would have gotten filled, let's say, at 517. So my point being is you're buying at the ask, selling at the bid. If you want to buy right away and sell right away, that's where you would buy at the ask, sell at the bid. If you're going to short, it's just the complete opposite. If you want to get filled right away, you would buy at the bid, and then, I'm sorry, my fault, rephrase that. You would sell at the bid. So let's start again. If you're going to short, instead of buying at the ask, selling at the bid, if you wanted to get filled right away, you would sell at the bid and then buy at the ask. So it's just, you know, let's just go, I'm going to say that a couple more times just to kind of make it, you know, kind of really sink in. If you're looking to short and sell right away, like if you're using hotkeys or you're getting into a position, if you sold the bid, you'd get in right away. Once you're in, to cover your position right away, you would buy the ask. So sell the bid, buy the ask. Or you can obviously do limit orders as well. You know, some people will sell the ask. So let's say price is moving on the way up. So on the way down, if price is heading kind of on the way down, you get your position. If you sold right away on the bid, you get filled right away. But a lot of people will sell on the ask. So when price falls back down, usually it kind of gravitates up a little bit. If you sold on the ask, you can wait a little bit, but obviously the price has to go up and get filled for you to get filled on the ask. So again, just to kind of reiterate it, if you're buying a stock on the way up, if you buy at the ask, you get filled right away. If you have the position and you sell on the bid, you get filled right away. You know, that's just saying, you know, God forbid the price. I'm just saying the price doesn't go up or down super quickly. Sometimes you'll sell at a bid or buy at the ask and price will move really quickly. But in theory, you buy at the ask, sell at the bid. With shorting stocks, if you want to get filled right away, you sell at the bid And then when you have your position, you cover by buying at the ask. So sell at the bid, buy at the ask, or again, if you want to try and get a better price, you can sell at the ask and wait for the price to kind of go up to the ask to get filled. And then, you know, to cover, you can buy at the ask, or you can buy at the bid. If price is falling more, you could always buy at the bid. So if you have your position and you see, you know, price is falling, instead of buying the ask to cover right away, you could put buy at the bid and wait for price to ideally drop if price is falling. But just kind of just reiterate it over and over there. It's just basically doing the opposite of what you would do with buying a stock. That's really as simple as it is. And so I just encourage people, you know, if you're watching this, just really practice. And once you practice, it's really simple. It's not scary to short whatsoever. Now, the only problem is brokers like Thinkorswim have a very difficult time locating shares. Interactive brokers, they're actually really good at getting shares to short. So overall, they're a really good broker to get shares to short. I use Thinkorswim for my charting, and then I use Interactive Brokers as my broker, and I use the DOS platform. I've been using DOS to get in and out of my trades, just basically for the hotkeys. So, you know, with Thinkorswim, if you see ETB, that means you can easy to borrow, means you can short. NTB means you pretty much can't. When there's not a space there, usually it means you can short, but I found issues with Thinkorswim even with when it doesn't show anything there. So your easiest way to figure out is if it says ETB. But I just want to, you know, just take a few minutes of just really kind of stressing shorting, because when I'm making my videos moving forward, again, I am myself as a trader looking to be non-biased ideally when I'm trading. So I'm looking ideally for the best setup. So if the best setup on the day is a long, then I want to go long. If the best setup on the day is a short, then I want to go short. And that's ideally the best way, you know, that's ideally the best way to be a really good trader, is kind of go with what the market is giving you and with the best opportunity that's presenting you that day. So when you make these watch lists, you're going to basically look for stocks that are holding for their highs for the day, ideally going to break up and continue further, or ones that are overextended, potentially going to pull back, if that makes sense. So, like I said, I already did the watch list, but I'm going to go over the plays that I put on the watch list just to kind of save time. VSTM, that's a little bit kind of a crazy one here today. This one up, and it broke yearly highs. It hit 555, came back down, closed really at this 492. So in order for this to continue further up higher for a long, you want to see it break 555 and continue to go up. If you want to see this go short, obviously you want to see if it's going to open below today's close price of 492. And then you're going to have to be careful right around this 481 marker, because you're going to see this gap. So if it falls down into this gap, anywhere from 481 to the top of this candle, 468 is in the gap. So it's either going to continue up, or it can fall down to this gap and then do its thing. If it falls below the gap, it can continue falling. But this one's a weird one. It's not one that I necessarily love. It's trading sideways. I put it on here because it could have some volatility. It's one to potentially watch, and that's why I put it on the watch list. Not because it held its highs, but because it's going to do something, I'm sure, tomorrow, whether it's go up or go down. VYGR. So this one pretty much closed towards the high of the day. It kind of traded sideways, closed towards the high of the day. The high of the day was really that 1360 or 13. What is it here? Let me zoom in here. That 1369 marker, and you'll see if you do the support or the resistance lines overhead here, right around that 13. It's kind of a gauge, but right around that 1375 marker, you're going to want to see if this will go and break above that, and then you'll start to see some resistance right around 1452, probably somewhere around 14.2. You always just got to be careful around the whole dollar amounts. But if that can't go up and break above and go further up here, then this could potentially fall down And obviously then you want to start seeing this might be a good short opportunity. So if this thing opens below the close of the day, 1363, it's one to potentially watch for a potential short. It can go down. You'll see this gap down here, and it's definitely one to watch. So I really like this one simply based upon the potential volatility of this one to move either up or down. So I'm going to, I have a targeted watch list that I do my stuff on. I forgot to put it on. So VYGR. QUIK. So this one right here, you'll see some resistance right in that 175 marker. You want to see if this is going to break out above the 175, and then obviously be careful around $2 and then see what happens above that. If not, if it falls, obviously kind of support area would probably be right around this 156 marker. So you want to see it break above that 175 marker. And I set these alerts, you know, a little bit before those areas. Sometimes if they connect, that's okay. Sometimes they have a small breakout or a false breakout, or even if they break above. Ideally, if it breaks through this resistance, and then, you know, if, you know, it's going to continue further, then a lot of times it'll make a bull flag, so it'll go up, and then it kind of will pull back again, and that's a re-entry. So I'm not worried if I don't necessarily catch the breakout. A lot of these times they're false breakouts or really small breakouts before it continues to go further. CATB. This one right here, you want to see right at a $0.50 amount. You'll see it's kind of this flag or wedge area. It's going to end of the day right around the 150 marker, which is a $0.50 amount. So if it can break above that 150, this one could potentially run up. Obviously, there's some resistance around that 197 marker at the 50 SMA. So, you know, that's one to potentially watch. So I like to color code if something's a certain area that might be good to watch. So that 150 marker, see if it can break above. Then I would probably put some resistance again at that 197. And then also, you know, I'm going to remove this for now. I mean, there's this gap above. I mean, if it goes above and it breaks above, you want to see it break these areas. That'd be a pretty big gap fill to go. But, you know, if it can break this, you know, 150, and then if it can break 197, then who the heck knows, you know, where it goes from there. PCOM, I liked this one because obviously these are two really big green candles. You'll see it started to pull back a little bit near the yearly high at that 1079. So if it's going to continue forward, you want to see it break 1079 to go up. If it's going to fade, you know, then I would look, you know, if it opens lower than the 1056 tomorrow, start to see what happens. And then, you know, obviously look at $10 for first area support. And then I'd probably start looking, you know, $0.50 from there. You'll start seeing some potential resistance maybe around, you know, 950-ish. But what I like about these is something like, you know, if it's at 1080 and it can go and either break above or pull back to $10, that's a big movement. I like those ones. I like the overextended ones as shorts if the bid-ask spread are good. A lot of times these bid-ask spreads get a little bit nutty. Obviously, it's after hours now, so this is not a good judgment. But so that's really it. So like once, for instance, if this price gets to 1079 and you start seeing a bunch of sellers over here on the ask, you can see what price that they're selling at, and you could basically either one, sell on the ask or do a limit order to sell at whatever, like the areas. If you think it's going to pull back at that 1079, then what you do is basically just sell on the ask or sell, put a sell order, like sell at 1079, sell at 1078 or 1077. Obviously, you got to look at level 2 and support and resistance, but just giving you the mentality of shorting instead of buying a break of, let's say, 1079 if you think it was going to break above it. If you were going to short it, you would sell again. Sell at the ask if you see a lot of sellers on the ask. So you'd put an order to sell at the ask or put a limit order in to sell at a specific dollar amount, 1079, 1078, and or, you know, obviously check level 2, check support and resistance. But if you get filled, what you'd want to do to cover, if it goes against you, let's say you put an order in to sell at 1078 and it fills, and then price goes to 1082, then you would buy the ask right away if you wanted to cover. Or if it started to fall, you could put it at the bid. But if you wanted to immediately cover your position, let's say you sold at 1079, you're in, price breaks to 1082, 1083. If you buy the ask right away, you get filled. Unless obviously the price goes parabolic, then obviously that happens once in a while. Or if you put a limit order to buy whatever the price would be. So let's say if it went up to 1080, let's say the ask was 1083 and you got filled to short at 1078. Now you're down 5 cents. If you don't buy the ask and you just want to put a limit order, you can put a limit order to buy at 1083. If 1083 is the ask, then you get filled and then you cover your position. It's that simple. It's just really just the opposite of buying a stock. It's not scary unless obviously you hold overnight, you hold biotech stocks overnight. Doing stuff like that, I wouldn't suggest doing, but day trading, it's just the same support and resistance, just the opposite of just buying a stock and going long. It's really not hard. Just, if you want to get comfortable with doing it, just practice in a paper trading account. Just practice shorting. And that's really, it's just the myth of, the misconception of shorting being risky. It's really not that true. Again, it's just a matter of your comfort level. I personally really like shorting, and again, I tend to like shorting better than longing. I'm actually trying to retrain myself to actually do more longing just because I've gotten so comfortable with shorting. It's just weird. But again, it's just a matter of your comfort level. So hopefully that helped you. JASO. So you'll see this one held its highs on the day here. Now it's been going up. It's had some nice green days. It's broaching yearly, well, close to yearly highs. 2016 yearly highs. You can see there's a 774 back here. But these are some areas you want to see. 750, half dollar amount. Is it going to go up and is it going to break? Then we'll go to the 774. But at that 750 marker, if it doesn't break, this could potentially fall back down. And 708 marker, price $7, even potentially down here to $6. The first line of defense would probably be the $7 marker. And then also potentially down to the 13 EMA. But if it rejects at 750 and it fades back down to $7, that's a potential 50-cent move to short. That's why shorting could be really good in getting these stocks that are at yearly highs or overextended. And again, all you would do is you would watch price as it creeps up to 750, see if there's a bunch of sellers. Again, a lot of times level 2 is manipulated, so you got to be careful. And you could put a limit order to sell if you see a bunch of sellers wherever, like a big seller at 748 or 749 or 47. You can join them or beat them by a penny or so to get your limit order in. So let's say you sold at 748, right? Or you sold at the ask. So either you put a limit order to sell at, let's say, 747 or 748 and you got filled, or you bought at the ask and it was at 748. Again, whatever your comfort level is. I really like hotkeys. So I'm so trained with hotkeys that most of my orders are just buying at the ask, selling at the bid, with really tight bid-ask spreads, or buy at the bid or sell at the ask. Like, depending what I see, I'm just usually more comfortable getting in on hotkeys. But if you're comfortable with limit orders, again, let's say you sold at 747 or 48, and then price blows through and you're like, oh no, it's 754 right now, and you want to get out, and you're 6 cents short or 6 cents negative. All you need to do is just buy the ask right away to cover right away if you really want to get out of the position. So buying the ask on a short is basically like selling the bid on a long. So to get immediately out of your position on a long, you would sell the bid and get out. To immediately get out of your position on a short, you would buy the ask. So sorry for repeating, but I just want to really kind of drum it in if you're not comfortable shorting. That's how simple it is to do. Again, buy the ask to get in a position, sell the bid to get out. To short, sell the bid right away if you immediately want to get in the position, and buy the ask to cover. A couple more here. BLDP, you want to see it break above that 328, then be careful at 348 resistance, $half amount. See if it'll break above 348 to continue, or watch it pull back to 328 and then obviously potentially $3 from there. JCP, this one potentially going up into the gap, 421 marker up to 468. It was a decent gap to fill, but obviously be careful in that gap. See if it's going to go up into it or if it's going to fade. And WNDW, this one's crazy. Look at how overextended this is. This one would be a great one to potentially short when you can get, or if you can get an entry. See if this thing is going to break 549 and continue further. So if it breaks above 549, you can take it long. But if you see it kind of like getting shaky around 550, or it's about to fade, you know, you can take it short and then watch it kind of, again, watch it at $5. Watch it right around here, this 479, and then watch it right around this, right around the 13 exponential moving average. That's a very, on the daily, the 13 EMA is an extremely important area to watch for the trend line. So that's it. And again, just kind of reiterate it. If you want to buy a stock right away when day trading and you want to get in a position long, you buy the ask. If you want to get out right away, you sell the bid. That's saying you don't do a limit order if you were just getting in and out of a position really quickly. If you want to short a stock really quickly, I don't encourage doing that unless you obviously know what you're doing. But if you want to basically just get into a position short, you sell the bid right away, and to cover your position, buy the ask. So just practice doing trades that way, with just buying the ask, selling the bid, going long, and then shorting, selling the bid, buying the ask to cover. And then obviously to get better pricing, you know, if you're going long, you could buy the bid. If you're going short, you can sell the ask. It's just you got to get comfortable with it first. And then obviously do limit orders if that's what you feel comfortable with. I'm just so familiar with using hotkeys. I just want to give you both avenues on how to do things. So hopefully that helped you. Repetition is the key to success. So that's why I figured I'd repeat myself. So again, if you haven't been over to our Facebook fan page yet, make sure you come over, like our fan page, follow us. We post all of our updates. We post our watch list, our trade ideas, watch list in the morning over there by 9 a.m. So make sure you check our fan page every day, Bullish Bears, over on Facebook. And make sure, excuse me, you get our alerts so you don't miss our trade ideas watch list to coincide with this watch list. As well as go over to our website if you haven't already, and make sure you subscribe to our watch list. We send out our watch list by night, or at night, every night here. So make sure you subscribe over here if you haven't already, as well as join our free trade room. We actually have over 500 members in our trade room right now. We are a free trade room. I'm sorry to continue. In all my videos, I make this point, but it's very important to understand that we are giving our trade room for free to our members, and our membership is free. So if you've looked around at other trade rooms, it's extremely rare to find a good trade room for free. And it's going to be a lot harder to find one that's less than $100 a month. You know, a good trade room is $100 plus per month, and we're providing ours for free to our community members. As well as if you need some training, we have, you know, close to a couple $1,000s worth of free trading courses over here that we give our members that follow us. Just basically, again, our membership is free. Those that follow us, we give you courses to train you as well. So not only do we give you a trade room that's at least $100 a month value and a couple $1,000s worth of courses, we build a watch list every night. We show you how to do it. We send it out all for free, as well as we give our trade ideas, pre-market movers. This costs $100 a month, even though we do give you a discount. I do highly recommend getting trade ideas when you can afford it. If you're on a budget now, just use what we are offering now. But at some point, if you can't afford it, make sure you take advantage of the 15% Bullish Bears discount that we offer, because it's important to have a live scanner, because a lot of these things that we put on the watch list, sometimes they don't move and something else moves in the morning. And as well as Benzinga, we do post some news, pre-market, aftermarket. This is a great tool. We give you a 25% community discount. We highly recommend both Benzinga and Trade Ideas, but these are tools that save you a couple $100 a month that we provide a lot of content for them. And again, we provide everything for free. And the reason that we're doing this is Tim, Dan, and myself have a vision of basically really changing just kind of the perception that's in this industry. We want to give back. We have a passion and a heart for giving back. We ideally would love to stay a donation-based company. So right now we are a contribution or a donation-based community, which means you can take advantage of everything that we have to offer for free. But in order for us to grow and survive and to be able to continuously give back as a community, we do survive on contributions, just like many models that are out there for YouTubers and stuff like that. But in essence, instead of charging you $150 a month and charging you a few $1,000s for trading courses like pretty much everybody else does in the industry, we ideally don't want to have to go that route. But in order for us to be able to stay this route, we need pretty much everybody in the community to just give a little. Not everybody to give a lot, even though we would love it, but just a lot of people giving a little bit can help us to sustain this model. So ideally down the road, we build a big enough community and we have lots of members where big companies would come in and ideally pay us to give you basically an education, a free, training within the stock market. It's not a quote-unquote college education, but ideally if we can get companies to pay Tim, Dan, and myself, then we don't have to pass those charges along to our members, and we can just give everything away pretty much for free. That's our mission. That's our ultimate desire. But in order for us to do that, we need to survive on the monthly contributions of our community members. So if you'd like to contribute, we do have contributions for as low as $10 a month, $25 a month, $50, $100, however generous that you feel. We have the monthly option here, as well as one-time donations right over here. So if you'd like to give back, we would greatly appreciate it. And pretty much last but not least, make sure you subscribe to our YouTube channel. Once you click subscribe, there will also be a little bell right over here. Make sure you click on that to receive notifications as well, so that when we post our videos, you don't miss them. So again, subscribe and then click the little bell to be notified. And again, all our videos are over here. We have lots of content. Look at all of our videos. Feel free to like on them, share them, and comment on them as well. We do our best to be very interactive with our community. So hopefully this video helped you. I'll still continue to try to condense them. And again, happy trading tomorrow. Enjoy.